In 1979, two Texas billionaires had a plan so audacious it nearly broke the global financial system. They were going to buy all the silver in the world. Their names were Nelson Bunker Hunt and William Herbert Hunt, sons of H.L. Hunt, one of the richest oil tycoons in American history. And for a brief moment, their insane gamble actually worked. This is the story of how greed, paranoia, and unlimited wealth created the greatest market manipulation in history, and how it all came crashing down in a single day. The Hunt brothers weren't just rich, they were Texas oil money rich, the kind of wealth that makes you think you can bend reality to your will. But in the 1970s, they had a problem. America was falling apart economically. Inflation was raging, the dollar was weakening, oil prices were volatile, and President Nixon had just taken the United States off the gold standard in 1971. The Hunts didn't trust paper money anymore. They needed something real, something tangible, something the government couldn't just print more of. They chose silver. Their logic was simple. Silver was undervalued, industrial demand was growing, and there was only so much of it in the world. If they could buy enough of it, control enough of the supply, they could name their price. So in 1973, they started buying. Not just silver bars, but silver futures contracts. Lots of them. Most investors buy futures contracts to speculate on price movements. They never actually take delivery of the physical commodity. They just bet on whether the price goes up or down, then close their position. The Hunt brothers did the opposite. They bought futures contracts and demanded physical delivery. Truckloads of silver bars started arriving at their warehouses. They bought so much silver that they had to store it in vaults across multiple countries. By 1979, the Hunts and their associates controlled nearly half of the world's deliverable silver supply. Not the silver in the ground, not the silver in jewelry or electronics. The actual silver you could buy and sell on the open market, and the price started to move. In January 1979, silver was trading at around $6 per ounce. By September, it had doubled to $12. By December, it hit $24. The Hunt brothers were winning. Their silver holdings were worth billions, and they showed no signs of stopping. As 1980 began, panic set in across Wall Street. Industrial manufacturers needed silver for electronics, photography, and medical equipment. But the Hunts had bought so much of it that supplies were running dangerously low. Companies couldn't get the silver they needed for production. Meanwhile, ordinary people started melting down their silverware and family heirlooms to sell at the skyrocketing prices. Pawn shops were flooded. It was a silver rush in reverse. On January 17th, 1980, silver hit its all-time peak, $50.35 per ounce. The Hunt brothers' silver holdings were now worth over $8 billion, the equivalent of nearly $30 billion today. They had done it. They had cornered the market. But they had also made some very powerful enemies. The financial establishment wasn't going to let two Texas cowboys destroy the commodities markets. The Federal Reserve, the Treasury Department, and the major exchanges started coordinating a response. This wasn't about free markets anymore. This was about stopping a threat to the entire system. On January 21st, 1980, the COMEX, the New York Commodities Exchange where silver was traded, changed the rules. They implemented Silver Rule 7. From now on, traders could only liquidate positions, not open new ones. You could sell silver, but you couldn't buy more. It was a targeted kill shot at the Hunt brothers. The Hunts were using borrowed money, massive margin loans, to finance their silver purchases. They needed the price to keep going up to cover their debt payments. The new rule made that impossible. Then the Federal Reserve tightened credit, making it harder to borrow money for commodity speculation. The noose was tightening, and then the real problem hit: margin calls. When you buy on margin, you're borrowing money to control more assets than you can actually afford. It works great when prices go up. But when prices fall, your broker demands more cash immediately to cover the losses. That's called a margin call. And in March 1980, the Hunt brothers couldn't meet theirs. Silver had been falling for weeks. By late March, it had dropped from $50 to below $11 per ounce. The Hunts had lost billions. On March 27th, 1980, a day that became known as Silver Thursday, the Hunt brothers defaulted on their margin calls. They owed $1.7 billion to their brokers, and they couldn't pay. The news sent shockwaves through Wall Street. If the Hunts went bankrupt, dozens of banks and brokerages would go down with them. The entire financial system was suddenly at risk because two billionaires had bet everything on silver. The Dow Jones dropped nearly 40 points in a single session, the largest decline in years. Panic selling spread across markets. The government and a consortium of banks had no choice. They had to bail out the Hunt brothers. A group of banks, coordinated by the Federal Reserve, arranged a $1.1 billion emergency loan. The Hunts were forced to liquidate their silver holdings gradually to avoid crashing the market further. It was one of the first too big to fail moments in modern financial history. Nelson Bunker Hunt, when asked how it felt to lose so much money, gave one of the most famous quotes in financial history. $1 billion isn't what it used to be. The Hunt brothers were eventually charged with market manipulation. They paid hundreds of millions in fines and settlements. Their family fortune was gutted, and silver, it crashed. It wouldn't see $50 again for another 30 years. The Hunt brothers thought they could outsmart the system. They thought that by owning something tangible, something real, they could protect themselves from economic chaos. They were half right. Silver is real. It has industrial value. It can't be printed like paper money. But markets are bigger than any individual, no matter how rich. And when you try to corner a market, the market fights back. The Hunt brothers forgot the most important rule. You can't control what you don't understand. They thought they were playing chess, but the entire financial establishment flipped the board. In the end, they proved the opposite of what they intended. They didn't show that commodities were safe. They showed that nothing is safe when greed takes over. Silver Thursday wasn't just a financial disaster. It was a warning, a reminder that markets, like empires, can collapse in a single day. And when the crash comes, it doesn't matter how much you own. It only matters whether you can survive what happens next.